Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The magnificent meltdown. Asian markets follow Wall Street lower after a tech-led sell-off sees the Nasdaq crash to its worst day since 2022. Citi joins HSBC in downgrading U.S. equities to neutral, saying American exceptionalism is on pause as worries about the economy add to the threat from tariffs. Plus, will there be a deal in the desert? We'll bring you the latest from Saudi Arabia as the U.S. and Ukraine meet to discuss the push for a ceasefire in Russia's three-year-old war. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. A magnificent meltdown is what our colleagues are calling it. A huge sell-off in equities over the last 24 hours. A lot of red on the screen behind me. This was the close for Wall Street. S&P ending 2.7% weaker. The Nasdaq down 3.8%. A lot of declines on these U.S. equity boards. And the question is why? Some concerns about the outlook for the U.S. economy. This theme of U.S. exceptionalism perhaps coming to a close as some banks like HSBC and Citi are saying. Some concerns about the outlook for U.S. growth. Remember yesterday, President Trump saying that the U.S. economy is entering into a transition period when he was asked about the possibility of recession. Or equally, it could just be a valuation play in the fact that many of these indices got overcrowded. But this is the picture from yesterday, very, very red for these Wall Street closes. And the Russell 2000, also the small cap index, pulling back 2.7%. And Eurostoxx, the relative outperformer of the year, remember, this index is tracking gains for the year, up 10%, was not immune to the sell-off witnessed, broad-based across all of these markets, ending the session down 1.5%. But let's flip over to today. The handover from Asia, also not so pretty as well. The Asia-Pacific index down 1.4%. So risk-off sentiment continuing overnight through these Asian indices. We'll talk more about that in a moment. 10-year yields, the rally lower continues. We continue moving lower with these bond yields, down 3 basis points today. 4.18 is where we're at. Remember, it wasn't that long ago we were talking about 4.5, 4.6. We've rallied about 30, 40 basis points in the course of the last 10 days as, again, people get concerned about the outlook for the U.S. economy and what that means for the interest rate cutting cycle. The dollar also in focus today, slipping 0.1%. We are down 4% in the last month. This, as again, it ties into that U.S. exceptionalism theme, but it's also a little rare. Usually in an environment where you're seeing this much risk off, this much pullback in sentiment in U.S. equities, you'd expect to see the dollar to see a bid or witness more of a bid. That hasn't been the case and tells you about the market's perception about where they want to be positioning in terms of currencies in this sort of environment. So the dollar is seeing more of a pullback. And then Brent, we spoke about this yesterday, but all of these concerns around the global economy weighing on the energy complex. Just very quickly, I want to draw your attention to one stock that really took a bit of a beating yesterday, and that was Tesla. You can see from this chart, down yesterday, 15% over the course of the last 6 months, down 2.6%. Why are we showing you this chart? Well, since the beginning of this year, year to date, Tesla stock is down 40%, 40%. But going back all the way to the election, we've pretty much wiped out all of those post-election gains. And of course, with Elon Musk working very closely with President Trump, he was seen, or his companies were seen to be beneficiary of those close working contacts. That has not been the case. Yesterday, UBS putting out a report suggesting that Tesla deliveries are going to disappoint to the downside this year. The stock was down 15% yesterday. All right, let's continue the conversation with how markets are faring in Asia this morning. Avril Hong is in our Singapore studio. A lot of red on the screen there as well.
Yeah, but interesting how the region's benchmark is pairing the declines of upwards of 2% earlier, which in itself was its worst showing since the crash from 2 Fridays ago that was driven by tariff headlines, of course. Maybe as US futures pair losses, these dip buyers also emerging in the Asia-Pacific. That being said, we're still seeing Japanese stocks underperforming with that yen strength underway. The expectations are of a hawkish haul for next week from the BOJ. Of course, there's a bit of safe haven buying as well. But it's also interesting that it's not just about the Japanese currency, as a bit of a reversal from the steep losses earlier in the session get underway. We're seeing the Asia dollar index, this is a Bloomberg gauge of Asia currencies, which excludes the Japanese yen, managing a bit of gains. And amid all this, tracking Chinese stocks as well. They're getting hit, but not as badly as the rest of the region. And as some of our colleagues put it, The Chinese NPC is kind of getting this AI optimism injection, not just from DeepSeek, but now also Manus. So maybe some sense of resilience when it comes to Chinese stocks.
Avril, thank you so much for the overview. All right, let's continue the conversation about what's been happening with these markets, because the global sell-off in stocks did extend into Asian equities, as Avril was just talking about, after the Nasdaq 100 had its worst day since 2022. Equity markets stabilized in mid-Asian morning, with U.S. equity futures pairing losses and declining more than 1% earlier. For more, let's bring in MLife strategist Mark Cranfield. Mark, it really feels like a broad-based sell-off took place yesterday across all asset classes. I was even pointing out the fact that the dollar, in a risk-off environment, tends to do quite well. The dollar lost some ground yesterday, too. What do you point this down to?
Number of things, really, but obviously right at the top of the list is the fact that a lot of people are worried that a continuation of a trade war will have a very dampening effect on the US economy. So it was made pretty clear over the weekend by President Trump. He says he's not even looking at the stock market, so there's no suggestion that he's going to come in to try and stabilize it. And he also does expect some deterioration in the economy in the short term. But of course, that's a slightly dangerous game to play as far as investors are concerned. And at the same time, Jerome Powell reminded everybody that the Fed is very comfortable in their position. They're not planning to move interest rates in the near term. They're on hold, and happily so. They want to see how things evolve. So from the key policymakers, there's no encouragement to investors whatsoever. So all they're looking at is the threat that the economy could slow more quickly. Consumer confidence is already down. Job losses are starting to mount up. And the outlook of the near term is not very good. That's why you can see that now traders are pricing for at least 3 interest rate cuts from the Federal Reserve before the end of this year. It wasn't too long ago that we were only looking for 1. So you can, although people may not see recession as their base case, they're clearly very unnerved. And they're starting to think it won't be too long before everything needs to change and the Federal Reserve comes in to sort things out. In the meantime, while nobody is particularly helping, whether it's from the monetary policy or the fiscal side, investors are left to their own devices. And as you say, there's quite likely to be too many people who are caught in the market and now looking for an exit.
Yeah, it certainly appears to be the case. Bloomberg's Mark Cranfield, thank you for spelling it out for us. Well, for more analysis, joining us is Jun Bei Liu, founder of 10Cap. Jun, always good to have you, especially on these big market days. But let me start off by asking you your thoughts on the pullback that we've witnessed in the market. Typically, I know you have the tendency to be quite bullish and buy the dips. Is this case different?
Look, thank you so much for having me. And we always see this volatility as very healthy parts of the market movement. You know, every 12 to 18 months, we're meant to have that between 8 to 10% sort of pullback. And that's very, very healthy. Market just don't go up in a straight line. Now, of course, there's a little bit of uncertainty with the trade war and others. And then, it's essentially an opportunity for many investors to take profit off the table and wait to see if there's any more certainty. Now, there's one thing that, though, it is now you're creating a bit of, not so much worry, but downgrade to the growth expectation in the US is that these uncertainties is affecting confidence and is affecting the consumer spending, the corporate spending, and everyone sort of just going to hold back on all their spendings and to see how we go until we get clarity. And that is going to translate into hard data, hence why we're seeing a lot of downgrade in terms of growth expectations for the US. But look, net, we do see this as a good opportunity of finding some good quality companies. Now, mind you that we have said enter this year that the Magnificent Seven, the tech companies' valuation are very stretched. Hence, why we're seeing a lot more sell-off in that sector than the rest of the, the rest of the cyclical businesses. Whether the steel and other areas, we are actually seeing good buying opportunity. Yeah, so we sort of just wait to see more price movement and buying opportunities.
Do you still have faith in this so-called Trump put? It feels like many people had to price that out of the market the last 24 hours because over the weekend, President Trump was asked about the probability of a recession, and he said the U.S. is in a transition period. Market participants were not sure how to read that.
Yeah, look, clearly market didn't like it. And then last 3 months, we probably priced in a bit too much on the upside. And then now it's sort of overpricing on the downside. So we do think that, don't take too much weight in what he's saying, on the surface value. At some point, we are reaching a valuation support for a lot of those. And if you look at the policies he has in place at the moment, he delayed a lot of those tariff, announcements. Yes, he's still, in trade war, tariff escalation with China. But look, it's likely, in every likelihood, that they're going to reach some sort of compromise. So right now, it's just talk, and we'll probably reach very close to the maximum uncertainty.
Do you think this is the end of the so-called U.S. exceptionalism trade in the U.S.? I thought it was of note that the likes of Citi, HSBC are downgrading U.S. equity positioning to neutral in favor of other markets like China and Europe.
Yeah, look, I actually don't think it's the end of it. I think tactically, in the short term, yes, Europe is doing better. China is doing better. US has become so expensive, and we're downgrading growth. So tactically, there's a bit of a flow-on effect into other markets. However, if US growth is going to slow down materially, that is going to affect Europe. Europe is not going to grow, independent of the US slowdown. So, our view is that, yes, Europe tactically does have a good, improvement and growth outlook for the next 6 to 12 months. But if the US doesn't materially slow down, it will impact all markets.
How are you feeling about what we've learned from the NPC, some of the objectives that the Chinese authorities has set for the rest of this year? They feel as though they're very ambitious, especially in line with those deflationary figures that we had out of China over the weekend. How achievable is it for China to actually juice up the economy when the economy needs it?
Yeah, that's right. Actually, it looks pretty good. So that's many small incremental stimulus and givebacks is now sort of adding up. We are seeing improvement in the lead indicators, whether it's consumer, corporate confidence. Every part of the China economy does look like it's stabilizing. We wouldn't say it's, consumers doing a lot better. But, if you look at the housing, it's stabilizing. It's stopped getting worse. So with all these indicators, it does look like China is improving. Hence why we're seeing quite a lot of buying into that market, and that's really just the sort of the tipping point, of the potentially quite a big bull run to come.
Yeah, and also the renewed focus now on AI, especially with the advent of DeepSeek, and also Manus recently is the latest one that we've been talking about. Jun Bei Liu, thank you so much for joining us on the show today, founder of TenCamp.
Thank you very much.
Now, coming up next, the U.S. looks to secure a ceasefire in the Ukraine conflict as Trump's envoy to the Middle East plans a trip to Moscow. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg has learned that President Trump's Mideast envoy is expected to meet President Putin in Moscow. Steve Witkoff plans to travel to Russia this week in a bid to secure a ceasefire in the war against Ukraine. Meanwhile, U.S. and Ukraine negotiators are meeting in Saudi Arabia today to clarify possible concessions for a ceasefire deal. For more, let's bring in Bloomberg's Jill Deeses. Jill, good to have you with us. So the Saudi media agency released some photos of President Zelensky meeting with the Crown Prince MBS in Jeddah yesterday. What do we know about the discussions that the two had in a bilateral setting? And what are the expectations for the meeting that is going to take place today with the Ukraine delegation?
That's right, Jumana. So we're still sort of waiting for more detail out of what exactly materialized from that Zelensky MBS meeting. But obviously, this is all sort of predicated on, the idea that the U.S. has really been upping this pressure campaign on Zelensky and Ukraine to sort of come to the table and reach some kind of a deal. Setting for a lot of this action that's going down this week is obviously Saudi Arabia. So Zelensky wasn't expected to stay past that meeting with MBS to actually sit down and talk to Rubio, but we are expecting this meeting happening today, this Ukrainian delegation meeting with Marco Rubio, the U.S. Secretary of State, and a delegation from the United States. What Rubio said is that they're not, sitting down and pulling out a map and sort of drawing lines of borders that, maybe that would come up in concessions here. But what they do want is to kind of make some kind of progress about what a deal would actually materialize. Remember, there's a lot of things still sort of hanging over any kind of a peace deal here, Jumana. You're still looking at maybe, sort of some other deals that are kind of coming together here. So at the very least, it seems like if you can get Ukraine and the U.S. back at the table after, that quite disastrous meeting in the Oval Office just a little while ago with Zelensky and Trump, maybe they can actually make some progress here.
Yep. And Jill, let me just ask you also about the importance of Saudi Arabia and the role that it is playing as a middleman between Ukraine and Russia.
Yeah, look, Jumana, this is, clearly a country, that can actually sort of, opt as a more sort of, somewhat of a neutral setting here, obviously has interests both with the United States and with Russia. I think, again, it's really, important to kind of look at some of those types of geopolitical relationships in, when you're kind of looking at all of this together. So bringing both Marco Rubio into the Middle East here, along with Zelensky, along with that Ukrainian delegation, obviously very key there. And then, obviously, as you mentioned, just at a couple of minutes ago, also having this Trump envoy to the Middle East, actually traveling to Russia to talk with Putin, I think that really just kind of indicates that, you've got all of these pretty, substantial stakeholders at play here really trying to push towards some kind of a deal.
Yeah. It really is notable that the U.S. envoy to the Middle East is the one who's traveling to meet with President Putin. Very notable indeed. Bloomberg's Jill Deeses, thank you for the report. Now, for a look at some of the other stories we are following, Donald Trump says he's going to buy a new Tesla tomorrow as a show of confidence and support for Elon Musk. This after Tesla shares plunged to their worst day in more than 4 years yesterday, extending this year's decline. The stock tumbled 15% after UBS analysts cut delivery projections for the first quarter by 16% and said for the full year that the company would sell fewer cars. Sales have slumped in many European markets, and Tesla is struggling to keep up with local competition in China. Over at X, Elon Musk has blamed what he calls a massive cyber attack for widespread disruptions on the social media platform. The CEO claims the move was orchestrated by a, quote, large coordinated group or country. Tens of thousands of users reported intermittent outages on the app, with new posts failing to load for users. A pro-Palestinian so-called hacktivist group claimed the attack without providing proof. Now, coming up, Israeli leaders express displeasure at Washington holding direct talks with Hamas. We'll have the details and the prospects for a new ceasefire agreement in Gaza. That's next, and this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The U.S. has engaged in direct negotiations with Hamas regarding hostages in Gaza, including an American national. The move is causing tensions with Israel, which views Hamas as a terrorist organization that cannot be trusted. It comes as Israel halted its already limited supply of electricity to the Gaza Strip in response to the hostage crisis. So for more, let's bring in Paul Wallace, who leads our MENA economy and government coverage. First of all, let's just start with the fact that there are many within the Israeli government, many Israeli voices are very upset to see that the U.S. are engaging in direct conversations with Hamas. What has been the response, and how could that shape up the discussion surrounding the ceasefire?
I think it did. The fact that the U.S. Under Trump was willing to have direct negotiations with Hamas took Israel by surprise a bit. The U.S. says that Israel was aware of this, but there are reports that Israel advised the U.S. not to go down this route, but it decided to do that. I think there was also a sense in Israel, at least initially, that the U.S. wanted to get the one living American hostage out. and maybe that he would be prioritized over all the other hostages. And if this hostage had come out and none of the others had at that particular time, that I think would have sparked a bit of outrage in Israel, even though this person is a dual Israeli-American national. The Americans have since walked that back and said they're not negotiating just about this hostage's release, but about the broader terms. Nonetheless, I think it's pretty clear that that Israel is frustrated and angry about this. It's unclear whether the U.S. will do this again. It's been negotiating through its hostage czar, if you like, Adam Bolo, who's a Trump appointee, and he had a bit of a shouting match with Ron Dermer, who's an Israeli cabinet minister, very, very close to Benjamin Netanyahu. It's certainly a cause of tension, but it's something that Israel doesn't want to. It wants to contain it. Let's say it doesn't want it to get worse from here.
But equally, Israel are sending a delegation to Qatar this week to continue the discussions around the ceasefire. What are the stumbling blocks at this point?
It's still this issue of what happens next with the governance of Gaza and also what happens with the Hamas. Israel is now being quite insistent that Hamas has to step down from power and disarm. Yeah. The U.S. is going a bit further and saying that Hamas's leaders and perhaps all of its fighters have to leave the Gaza Strip. It's very difficult to square these positions. Hamas has signaled that it's perhaps willing to give up power to other groups or organizations within the Gaza Strip, but it's not said that it's willing to lay down its arms, and its leaders do not seem inclined at all to go into exile anywhere. So this sticking point is going to be very hard for the U.S., Israel, Hamas, Qatar, and Egypt to come to an agreement over.
Yeah. I mean, there's a difference between governance and maintaining a military presence, and Israel very clearly do not want Hamas to have any form of military presence on their borders. Paul, thank you very much for the reporting. That was Bloomberg's team leader for the Middle East, Paul Wallace. Now, shares in shippers Moller-Maersk and Hapag-Lloyd have both advanced on reports that Houthi rebels issued a 4-day ultimatum. According to Lloyd's List and Tradewinds, the Yemeni group said they would resume attacks on ships in the Red Sea if Israel continues to prevent aid entering Gaza. And a look at equity futures, given the tumult we saw in markets yesterday, things are looking up. We've got S&P futures leaning towards the green, up 0.3%, Nasdaq up 0.2%. Euro stock futures, which also were not immune to the sell-off yesterday, also leaning towards the green as well. So some stabilization coming through with the early signals of these U.S. markets. But of course, anything may change in the next few hours. Coming up, the U.S. and China are reportedly discussing a potential summit between Donald Trump and Xi Jinping in June, when both leaders will be celebrating their birthdays. Details next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The magnificent meltdown. Asian markets follow Wall Street lower after a tech-led sell-off sees the Nasdaq crash to its worst day since 2022. Citi joins HSBC in downgrading U.S. equities to neutral, saying American exceptionalism is on pause as worries about the economy add to the threat from tariffs. Plus, will there be a deal in the desert? We'll bring you the latest from Saudi Arabia as the U.S. and Ukraine meet to discuss the push for a ceasefire in Russia's 3-year-old war. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Good morning again, everybody. Let's take a look at how these markets are faring. We had quite the pullback for Wall Street yesterday with the S&P and Nasdaq seeing their worst day since 2022. You have to go almost 3 years back to get a day as bad as yesterday for these markets. Technically now, the S&P is getting very close to correction territory. We're down 9% from the peak. The Nasdaq is down more than 14% from the peak, so getting close actually to bear market territory. countries. So there you have it. But some stabilization coming through now in these futures, equity futures, the S&P leaning towards the green, up about 0.3%. Nasdaq also up about 0.2%. We saw some major declines yesterday in Tesla. The stock was down 15%. But again, some green is coming through on the board right now. And then Euro Stoxx futures yesterday also seeing a massive sell-off for those European markets, down more than 1% today. Some green on the board too. So stabilization is the theme. As for other asset classes, take a look at what's been happening with these Asian Pacific equity markets. They hand over there pretty negative, down 1.2%. We'll talk more about that in a moment with Averill. 10-year yields continue their march lower. We're sitting below 4.2% now, so about 3.5 basis points lower. The dollar index, this is something that I've been talking about. Despite the risk-off sentiment that's prevailing, typically you would see a bid for the USD transpire. That is not the case. And in the last month or so, the dollar is down 4%. Today, down 0.2%. And then Brent, we touched on this yesterday, sitting below $70 now. $69 is where we're at. Also keep an eye out for some of the headlines coming through from Syria Week, a big energy conference taking place in Houston. Now, lots of the big senior executives from the oil industry have been speaking about the challenges of the energy transition and the outlook for oil production in the future. So something to bear in mind there. This is just a picture of the Magnificent Seven. As you can see, year-to-date, down more than 15%. All right, let's check in on Chinese stocks as well. Averill Hong is in our Singapore studio. Coming to the end of this NPC meeting, what is the reaction in stock markets today?
Well, I mean, there's going to be focus on this AI enthusiasm that seems to, as our colleagues highlight, be injecting new energy into the NPC. So on a day where the broad driver is concerns about the US stock sell-off, it's interesting to see Chinese equities relatively more resilient than the rest of the region. And we are seeing also how it's not just about that AI optimism. You look to how the likes of Citi have downgraded US stocks to neutral and then upgraded Chinese equities to overweight. Really interesting to see that dynamic at play here. We're also going to be keeping a close watch on these Chinese shares in Hong Kong. If you flip the board, you take a look at this chart as well. For now, it looks like it's part of this downbeat trend in the selling in equities, and investors seem to be focusing after this period of time, right, where we see this strong uptrend since the middle of January, maybe due for a bit of a cooling off, as our colleague MLive Mark Cranfield highlighted.
Yeah, Averill Hong in Singapore, thank you so much. Well, more on that NPC gathering. China's NPC gathering did show a renewed focus on artificial intelligence, with lawmakers proposing to promote AI-related education and scale-up applications. Our chief North Asia correspondent, Stephen Engel, joins us now from outside the Forbidden City in Beijing. It's quite the shot, Stephen. It's good to have you with us. Well, let's just talk about some of the key takeaways of the NPC. We've been very much focused on those ambitious targets set for growth, 5%, for inflation, 2%. But AI has also been a major theme this year.
Yeah, absolutely. Look, boosting domestic demand, domestic consumption has been the stated priority for this year for policymakers. That is for sure, as they try to counter some of the headwinds coming on the trade front and the export shock potentially down the road. But clearly, in all the meetings we've seen or heard from and been at press conferences, AI is the common theme that is kind of infused throughout all the discussions. You had the securities regulator, Wu Qing, talking about how DeepSeek was mind-blowing. And look, all these cadres from across the country have come here, and we're hearing behind closed doors there's been quite some interesting, if not heated, debates over the last week since the opening, of course. It's a week-long affair, usually highly choreographed, but clearly AI has infused a sense of urgency and optimism among the cadres from around the country, because they all want to get central government money to be the next hub for AI innovation. Jiangsu province and Hangzhou, where DeepSeek is based, there's a number of other little AI dragons based there, but every province from Guangdong across the country would like to see that kind of innovation come to their province. So they've come here behind closed doors touting that they can also provide the necessary infrastructure and obviously innovation to be an AI hub as well. Clearly on everybody's minds here.
And Stephen, talk to us about the reports that came through overnight suggesting that there may be a summit that could take place between Presidents Trump and President Xi in June, but it's being dubbed the birthday summit because both of these leaders have their birthdays in June.
Yeah, their birthdays are 1 day apart, 7 years apart, but 1 day apart on the calendar. June 15th, I believe, for Xi Jinping and June 14th for Donald Trump. Did I get that right? Yes. 7 years apart, Donald Trump to his senior, Xi Jinping senior. But, I think this is wishful thinking, perhaps on the part of the White House. We also had some reporting today to show that U.S.-China talks have been kind of mired in very low-level discussions, working group levels. And from what I know of the Chinese leadership, they are not going to even entertain at this point when there's so much acrimony on the trade front. Keep in mind, of course, the fentanyl issue is front and center of these Trump tariffs, upwards of 20%. And all communication out of the Chinese side is saying this is a U.S. problem. There's been no acknowledgement, really, at least through public channels, that this is a Chinese issue. So the last thing that Xi Jinping and the leadership here in Beijing would want is Xi Jinping to fly to Washington, D.C., sit in the Oval Office with Donald Trump and get the Zelensky treatment, right? So, there's going to be a lot of dialogue that has to happen before these two men get in the same room. More likely would be Donald Trump coming to China, where it'll be a lot more orchestrated and China can control the deliverables. They're not going to have a summit unless China has a positive deliverable.
Yeah. And really interesting points you bring up vis-a-vis the Zelensky treatment. You've got to wonder whether J.D. Vance will be attending that meeting. Question for June, I guess. Bloomberg, Stephen Engel, a great shot. Thank you so much for the reporting. Now, Bloomberg has learned that President Trump's Middle East envoy will travel to Russia to meet with President Putin. Steve Witkoff will make his second trip to Moscow this week as U.S. and Ukraine meet in Saudi Arabia to discuss a potential ceasefire. Joining us for more on this is Rachel Ziemba, founder of Ziemba Insights. Rachel, really good to have you with us. Do you think we are going to get a deal in the desert this week?
I'm not sure we're going to get the big deal this week. It remains to be seen but maybe we'll get some smaller agreements to keep talking, right? What we have going on today is talks between Marco Rubio and others on the U.S. side, and parallel discussions, as you said, between Witkoff and the Russians. I think we're still in early days of getting to a broader deal. But the point is the Ukrainians are back talking to the Americans. There's a question about the mineral deal being back on. But I still think there's a number of rounds left before we get to a ceasefire.
Yeah, and U.S. security guarantees, U.S. military assistance, intelligence sharing, all of these topics have come up in the last week, especially as the U.S. decided to temporarily hit pause. To what extent do you think Zelensky signing on to the minerals deal will unlock that support from the U.S.?
It's definitely part of the package. I would imagine U.S. officials will want to see his willingness to make some other concessions beyond just the minerals deal, which in the minerals deal itself, I think is an agreement to hammer out details in the future about minerals and other investments. It's an agreement to keep talking and to think about a special role for sort of U.S. investment in the region, but it's definitely not the kind of security guarantee the Americans, that the Ukrainians are looking for. And that's where I think Europe is going to come in, and this question mark about what Europe will be allowed to do. So I think it's part of the package and it's a major symbol of the package, but I'm not sure it's sufficient.
Rachel, I want to bring it back to a market that I know that you follow closely, as we do in this part of the world, and that is oil markets. We have Brent trading below $70 now at $69. I think Many market participants were surprised to hear that OPEC do actually want to continue with their plan of bringing back extra barrels to the market from the second quarter of this year, despite some of the weakness that exists and the fact that oil can't get a sustained bid at this point. Do you believe that there was some political pressure being applied to OPEC Plus and the fact that President Trump has been quite vocal about his desire to see OPEC produce more?
Well, they had definitely very public pressure. I can imagine that from the Saudi perspective, there was a desire to start returning some barrels to the market to make sure not to lock in the loss of market share. I also think, part of it is, as we regularly talk about, is this question about issues, U.S. involvement in sanctions enforcement around the timing of OPEC's decision to continue with its stated plans, was sort of a rollback in sanctions on Venezuela. That we'll still see what happens at the end of this month, early next month, whether those licenses are indeed withdrawn. Also, some tighter pressure on Iran, going back to the pressure of the Biden administration. And while the Saudis wouldn't want, and OPEC wouldn't want to backfill their sanctioned counterparts, trying to sort of send that message. The other thing, what I'm hearing also from colleagues who are at Zero Week in Houston right now is this sort of recognition from those in the oil patch that the U.S. government really wants cheaper oil prices. And so even though OPEC doesn't really want cheaper oil prices, they may feel more confident that at these price points, the U.S. Oil patch is not going to be adding as much new supply as they might have feared.
Yeah, and just a last quick one. Do you think that perhaps $60 is a more reasonable level for oil to settle at than $80 at this point? I.e., do you think this downward pressure on oil is going to continue?
I think in this environment, especially where we're seeing pressure on other risk assets, we're seeing worries about economic activity, concerns about how tariffs might disrupt a number of supply chains, then yes, the direction of travel is probably lower. But I think it's unlikely to stay at the $60 level long. I think we could see OPEC, reversing or pausing further additions. And I think we'd start to see some of the more price sensitive producers in the United States, even in Canada, thinking about curtailing future production. So those are all the factors there. And I really think out of the U.S., it's really going to be natural gas we see coming on the market, not oil so much.
Yeah, and actually, we wrote a really nice big take on that yesterday, our colleagues in the energy department. That's on the terminal.
Yes,
so thank you for previewing it for us, for our viewers. Natural gas and how the U.S. gained such a big advantage on LNG exports. Rachel, always a pleasure to chat to you. Thank you so much for coming on. Rachel Ziemba, founder of Ziemba Insights. Now, coming up, chocolate melts down Ghana's economy. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Ghana's economy grew at its slowest pace in more than a year at 3.6% in the fourth quarter. This as industrial activity almost stalled while the cocoa sector shrank again. Bloomberg's Ondiro Ganga joins us for more. So a bit of a cocoa slowdown. Tell us what's going on here, Ondiro, because I thought the prices of cocoa was going up. So why are Ghana not benefiting?
Hi, Jumana. So a couple of reasons are contributing to this. If we look at agriculture, it grew by 2.9% from a revised 2.5% in the third quarter of 2024. But cocoa continued to shrink at 21.4%. And this is the sixth consecutive quarter that we're seeing cocoa shrinking. And this just speaks to headwinds that are affecting the world's second largest producer of cocoa beans. This include climate change, where we are seeing extreme weather. There has been rainfall that has led to flooding of cocoa fields. There are also diseases like swollen shoots, and Cocoa Board says it affects 17% of the total tree stock in Ghana. Then you have aged trees that are over 20%. And then there's smuggling. These beans are being smuggled out of Ghana into Ivory Coast and Togo with the hope of getting a little bit more prices, because Cocoa Board always locks the prices at the beginning of the planting season. Other sectors that we saw contract include industry that shrunk by 0.2% from 10.7% in the third quarter of the year. And so this is some of the factors that compounded and contributed to growth hitting 3.6% in the fourth quarter from 7.2% in the third quarter.
And there's a budget reading coming up today. What are we expecting from the Minister of Finance?
The biggest news will be on debt servicing obligation. This year, Ghana resumes its payment, and it's such a sizable chunk over the next 8 years, and Mahama will be in power for 4 of those. So how are they going to balance that? How much of their money, the revenue that they raise, is going into debt servicing, and how much headroom will they be left with to work in terms of development? This is a government that has made it very clear that they're focused on austerity measures. They'll be cutting down on wasteful spending, but we'll also be keen to see where that money will be going into. The minister also said earlier on that they're working to rationalize taxes. It will be interesting to hear how they intend to balance that with IMF targets.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you so much for the reporting there. And coming up, Egypt's inflation rates almost halved in February. We'll discuss what impacted the significant drop next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Egypt's inflation has dropped by almost half to its lowest level since March 2022. This is after an FX crunch that fed a black market for dollars, which wore off. Ziad Dawood, the chief emerging markets economist at Bloomberg Economics, joins us for more. Let's talk about this surprising inflation print yesterday. It came a lot lower than many people had penciled in, but there is some base effect at play here because of what has happened to the currency in the last 12 months. So just walk us through the dynamics.
There's a massive base effect. So the way inflation is calculated is you compare this year's prices to what was happening a year ago. And a year ago, Egypt was in peak currency crisis.
Yeah.
There was massive dollar shortages. People were pricing the dollar at £70 per dollar. Compared to at the time the official exchange rate was 31, and if your base moves from a low one to a high one, your inflation is going to drop when you do the comparison compared to a year ago. So it's mostly base effects, and if you actually look at the monthly inflation rate, it's relatively unchanged at around 1.5% month-on-month increase.
Yeah, the big question for the Egyptian economy is when the Central Bank of Egypt can start with the cutting cycle. And now, given we've had this downside surprise to the inflation print, you have a base rate that's almost 15% higher where the annual inflation print came at. Is it time for the central bank to be more aggressive with the easing?
Yes, if you look at the determinants of what determines the central bank's decision to cut or increase rates is two things. One is where the interest rates are relative to inflation. And as you've mentioned, the gap is now quite big. It's about 14 percentage points. That gives them plenty of space to cut. And the second thing is where the interest rates are relative to global interest rates. And the most important global interest rate is the one that's set by the US, and that's around 4.25. And again, there's a big gap between 27.25 and 4.25. So there is also room to cut here.
If the central bank do start aggressively easing, does that undermine some of the progress that is being made in terms of currency and currency stability?
It's all relative, right? So if your inflation is dropping, if global interest rates are dropping, then cutting interest rates would not undermine this. What Egypt is currently recovering from the 2-year crisis it had between 2022 and 2024. And for that recovery to happen, you need a few things. One, you need the stability of the currency. which is currently it's just about 50 pounds per dollar, which is happening.
Yeah.
You need an inflow of money, and for that you need interest rates that are relatively high relative to inflation. I need a stable global environment, and I think these ingredients currently are there in Egypt.
Yeah, so would you say that Egypt has exited the worst of the currency crisis then from that period to 2022, 2024?
It has exited the worst, but it has to live with the aftermath. So let's also remember that over the 2 years when it had the crisis, the currency fell by 69% against the dollar. Let's remember that inflation did go up significantly, and prices are still going up at a slower rate.
Yeah.
Let's also remember that the living costs have been hit in Egypt. So it has to live with the aftermath. People have taken a massive hit to their living standards, but the worst of the crisis is certainly over.
And also, let's not forget, they are in an IMF program. So what are the expectations vis-a-vis the discussions taking place now regarding the disbursements of the latest tranche?
Well, I think they're doing all the right things, right? So they're basically meeting the conditions in terms of, controlling their fiscal spending, in terms of keeping monetary policy tight, in terms of controlling inflation. So I don't think we should expect many surprises there in terms of the disbursement of the tranche.
Yeah, Ziad, always good to chat to you. Thank you so much. That was Ziad Dawood, Chief Emerging Markets Economist at Bloomberg Economics. Thank you. Well, Lebanon's finance ministry says its meetings with the IMF, speaking of the IMF this week, will be significant as the country seeks recommendations that would help pave the way for a new loan program. The IMF delegation is set to review the government's budget and discuss plans to finance local debt. Okay, we had a massive pullback in equity markets yesterday, but this is the picture for futures this morning, leaning towards a more positive start to the day. All of these futures are trading in the green. S&P futures up 0.2, Nasdaq up about 0.1, despite the pullback yesterday. The Nasdaq dropped 4% by the end of the day yesterday. Tesla stock down 15%, and even European markets, which have been the relative outperformer this year. I know it's a bit of a surprise, but European markets actually have been the outperformer. Even they closed down in negative yesterday, but they're leaning towards the green today too, up 0.3%. Now, coming up in the next hour, Rob Subbaraman, Nomura's chief economist and head of global markets research, joins us from Singapore. I'm Jumana Bersachi, and Jennifer Zabazaja joins us next. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The magnificent meltdown. Asian markets follow Wall Street lower after a tech-led sell-off sees the Nasdaq crash to its worst day since 2022. U.S. and European futures stabilize after the bruising session. Citi joins HSBC in downgrading U.S. equities to neutral, saying American exceptionalism is on pause as worries about the economy add to the threat from tariffs. Plus, will there be a deal in the desert? We'll bring you the latest from Saudi Arabia as the U.S. and Ukraine meet to discuss the push for a ceasefire in Russia's 3-year-old war. Well, good morning, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai alongside Jennifer Zabazaja, who is in Johannesburg, where it's just gone 7 a.m. We'll be out to Jen in just a moment. But before we do that, let's talk you through some of the market price action. We saw quite the pullback yesterday, the worst day for the S&P and Nasdaq since 2022. Nasdaq down 4% by the end of the session. Yesterday, we are technically in more than just a correction for the Nasdaq. It's down more than 14% than the most previous peak. Magnificent 7, it's even worse, more dire than that, getting very close to bear market territory, so almost down 20% from the peak for some of these major tech stocks. But today, things seem to be stabilizing. We've got S&P futures, Nasdaq futures, all pointing towards the green. Attention may actually now shift to the data. We've got an important CPI print coming up tomorrow, so that could be a focus for investors, assuming that this green and the positivity on the board right now does hold in the U.S. session. We've also got Eurostoxx futures up 0.3%. Remember, for most of this year, the European markets have been the outperformer. European stocks up 10% year to date. Yesterday, not immune to the sell-off. We closed down more than 1%, but today some green on the board as well. Flipping over to other asset classes, though, because the picture there does really tell the picture of a broad risk-off sentiment, as I've been highlighting. The handover from Asian equities pretty negative. The Asia-Pacific index down 1.2%. 10-year yields down another 4 basis points today in the overnight session. This adding to 8 basis points rally that we saw in yesterday's trading. The market now pricing in more than 3 rate cuts out of the Fed in 2025. So throughout the rest of this year. Dollar index also slipping a little bit in trade this morning, down 15 basis points. And then Brent sitting below the $70 mark as well. But one stock in particular I just want to draw your attention to is Tesla. We spoke about the decline in tech stocks and in Magnificent Seven. Take a look at what's been happening with Tesla. Its peak was back in December. Since the beginning of this year, the stock is down more than 40%, 40% lower since January. And as you can see from this chart, we've pretty much completely wiped out all of the gains that the stock saw post the U.S. elections. And one thing that I do want to point out as well is that yesterday UBS put out a report suggesting that Tesla will be disappointing on their deliveries this year. So that sent the stock 15% lower. All of that happened yesterday. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio with the roundup. Avril, just run us through how these markets are faring.
Yeah, Asia's stock gauge is pairing earlier declines of as much as 2+% as U.S. futures point to a bit of a rebound. Maybe the selling previously was enough to draw in these dip buyers. And indeed, as we're back from the lunch break, we're seeing still those losses in China, but not as bad if you compare it to what's going on in the rest of the region. Some of this is maybe that continued AI optimism, maybe some stimulus hopes from the NPC. And of course, we also had the likes of Citi upgrading Chinese stocks to overweight, as they say that U.S. exceptionalism is at least on pause for now. Highlighting as well, Japanese stocks really the underperformer today amid the yen's strength. Dollar-yen lowest level since October last year. Some of this from the expectations of a hawkish hold from the BOJ next week, but also safe haven demand. And keep in mind as well that the Japanese stocks, if you're looking at the topics at the Nikkei, they're headed for loss-making for this calendar year, and it seems quite unlikely that before the end of March, that they're going to be looking at profits for now, at least. Jumana.
Avril, thank you so much. Now, the global sell-off in stocks did extend into Asian equities, as Avril was just highlighting, after the Nasdaq 100 had its worst day since 2022. So let's talk more about the price action and bring in Bloomberg executive editor for Asian markets, Paul Dobson. Paul, well, we are seeing a bit of a stabilization come through in futures today. Could this be it? Is this the end of that massive pullback that we had in U.S. equities and global equities yesterday?
I think it would be brave to call an end to it just yet, because nothing's really changed in terms of the global macro backdrop. In fact, we heard from Trump again of just a few hours ago, ratcheting up that pressure once again on Canada, talking about the fact that more tariffs are coming and reciprocal tariffs may be layered on top of that as well. So that tension is still there. That's one of the things that has been giving investors cause for concern, worries about the U.S. economy, and creating that drag on equity markets. And at the same time, the Fed has been indicating that it's staying out of it, basically. It's not going to be moving anytime soon. It thinks the interest rates are at about the right level for where they need to be right now. So you don't have that support coming through either. I think what we did see is a bit of an exhaustion of all of that selling that we felt during the US day and then into the start of the Asia session as well. It kind of felt like, to be honest, once US traders logged off for the night, went to bed, once the algos kind of cooled off, that was the sort of signal for a little bit of that rebound to come in. But is this the end of it? I think it would be very hard to call the end of the drop just yet.
Maybe the algos are asleep. We'll see what happens when they wake up. Paul, was there anywhere to hide yesterday? I feel like even the typical safe havens didn't perform as well as they should have in an environment where you're seeing such risk-off sentiment.
Yeah, so we didn't see gains in gold, which has been performing pretty well as a haven recently. We did still see flows into treasuries, lower bond yields, and particularly at the short end of the yield curve. That's where we've been seeing most of the buying interest recently, which has been steepening the yield curve as well. People are, starting to bet on the idea that the Fed will have to shift if things get too much worse from here. But then we also have opportunities out there. Okay, didn't do particularly well yesterday, but there's been a lot of money flowing into European equities and the European space. Likewise, China. China's been performing pretty well all the way through the MPC meetings that we've had. So it's not a completely dour look all the way around the global economy. And that may be another reason, I think, why in this Asia session we've moderated some of those gains. This isn't really our story right at this moment in time. Now, if it does get much worse in terms of confidence in the US, it becomes a global story and there's probably no escape and people will flow much more into those havens. But if not, then maybe, you know, the market continues to trade in these independent narratives for a little bit longer first.
Yeah, very clear. Bloomberg's Paul Dobson walking us through some of the market dynamics. Thank you so much. Well, joining us now is Rob Subbaraman, Nomura's chief economist and head of global markets research. Good to have you with us, Rob. Many people seem to be turning neutral, if not downright negative, about this theme of U.S. exceptionalism. Are those concerns valid, do you think?
Hi, Jemima. I think they are valid, and I think the whole U.S. economic exceptionalism narrative right now is pretty delicately poised. So, you know, one thing is the U.S. Economic data is weakening, and the big question mark is exactly by how much. Is it going to lead to a recession or not? But the other thing that's happening is, as Paul just mentioned, outside the US, Trump's policies are driving more stimulus. There's a fiscal bazooka underway in Europe. China's just completing its NPC and is doing more fiscal stimulus as well. So, you know, I think there is this happening as well, which is also, I think, weighing on this narrative of US economic exceptionalism in a relative basis.
Yeah, it's ironic. Nobody would have thought that the best thing to happen to Europe would be the arrival of Trump. It's just, Europe seems to have got its act together. We've gone from MAGA to mega. Let me just bring it back to some of the market moves, though, because yes, there's a lot of talk about the economic growth profile, about tariffs, but we've also seen a major pullback in some of these Magnificent Seven stocks as well. So I wonder whether the other thematic that's emerging is also to do with valuations and the ability to monetize on the capex spending that has gone down in that space.
I think that is part of it. Clearly, you know, the US equity market has had a substantial outperformance by itself, and also particularly relative to other markets, and the Mag 7 has led the way. I guess, you know, one concern I have is the risk of non-linear effects starting to kick in the US, and particularly a malign interaction between weakening economic data leading to more of an equity market correction that has negative wealth effects because there has been so much wealth buildup in the equity market. And then that hurts consumption and growth, and you get the circle going round again. You know, that to me is a potential way you could get towards a US recession. And so that's something we're monitoring closely. But, you know, on the other hand, credit spreads are holding up reasonably well. I mean, they're not in red danger zone territory right now.
Rob, do you think, this is Jennifer in Johannesburg, thanks for being with us. Do you think all of this market activity is going to be driven by tariffs in the near term, or is there someone else or something else who could potentially change the direction of travel right now?
Hi, Jennifer. I think the tariff story is going to be really important this week and in the coming weeks, because you know, clearly the market is trying to work out, is there a so-called Trump put? I don't think there's hope of a Powell put just yet, but, you know, part of that Trump put could be easing off on tariffs. This week, with the pledged 25% tariff on all US imports of steel and aluminium, I would be very surprised if Trump and his team step back on that. I think that is going to go through. And given where we are with market sentiment and so forth, I think that would be taken quite negatively. But also April too, a lot of reciprocal tariffs and other policies have been pledged. And I think there is going to be some of that happening. So, you know, I think the challenge for markets is that the hope of kind of Trump or Powell coming to the rescue is more hope at the moment. I suspect it's not going to come that quickly. Tariffs is a key leveraging tool and part of this U.S. administration's approach to kind of make America great again.
Where's the opportunity, Rob, if there is an opportunity? I know, based on your notes, you believe that India potentially could be insulated from the worst effects of this. Where do you see there could be some green shoots possibly?
Yeah, I think, it's all on a relative basis, I'd say, right now, because, the world's biggest economy is starting to struggle a bit. But I think, once the dust settles, I do think India offers good opportunities. The equity market has already corrected quite a bit. But, just going back to basics, India's economy is on track to grow around 6% in the coming years. That's the fastest of all kind of major economies. And inflation is coming down as well. So the fundamentals are looking pretty good. India is also going to benefit from this drop in energy prices around the world. And the final thing I'd say is on geopolitics. I think contrary to what many think, I don't think India is that exposed to tariffs. It's not that intertwined to the supply chains around the world like other Asian countries. And it's a good counterweight, right, to US and China. And so I think, India could stand out pretty well going forward.
Fascinating insights. Fascinating insights there. Rob Subbaraman, Nomura's chief economist and head of global markets research. Thanks so much, Rob. Great to get you on this morning. Now, coming up, could we see a deal in the desert? Details of the U.S.-Ukraine talks are coming up next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Bloomberg has learned that President Trump's Middle East envoy is expected to meet President Putin in Moscow. Steve Witkoff plans to travel to Russia this week in a bid to secure a ceasefire in the war against Ukraine. Meanwhile, U.S. and Ukraine negotiators are meeting in Saudi Arabia today to clarify possible concessions for a ceasefire deal. Joining me now is Tony Halpin, who leads Bloomberg's Russia economy and government coverage. The Ukrainian delegation is meeting with the U.S. Today. Let me just start off by asking you what concessions you think the U.S. team are looking for out of the Ukraine delegation, and how do you think that ties in to the conversation that President Zelensky may have had with MBS yesterday?
Yes, it's interesting. Secretary of State Marco Rubio made clear that he was basically wanting to test the waters with the Ukrainians to see what they're willing to concede in some sort of compromise deal with Russia. And that implies territorial concessions because Russian forces are occupying Ukrainian land at the present time. That's a very difficult thing for Ukraine to sign up to, but it looks like the US is pushing for some clarity on what they could tolerate and what they could agree to in return for an end to this war. So it's a pretty significant meeting today, I think.
Yeah. And in terms of what is happening with these discussions, clearly there's a lot of progress since 10 days ago when that Oval Office meeting took place between President Zelensky and President Trump. We now know that Steve Witkoff is going to be traveling to Russia, which is interesting because he's technically the Middle East envoy. What do you make of that trip?
Yeah, this is pretty significant, actually, because the last time Mr. Witkoff was in Moscow, he had 3.5 hours with President Putin. That's a very long time for a person of his rank in relation to the president. He went back to the United States, and Trump then had his phone call with Putin, and there were these series of concessions to the Russian position that we all know about, ruling out Ukrainian membership of NATO, talking about Ukrainian concessions of land in return for a peace deal. So it's pretty significant that he's there this week at the same time as the US is meeting the Ukrainians in Saudi Arabia. The pace of negotiations has really accelerated in this search for a ceasefire.
Yeah, and it seems as though the Ukrainian side are okay with the idea of a temporary truce, an air truce, a sea truce, but that is something that the Russian president objects to.
Yes, President Zelensky of Ukraine has said all along that he wants the war to stop and he wants a truce, and he's proposed an air truce and a truce in the Black Sea as a way to begin negotiations. Russia's not yet signaled that it's ready for any kind of truce except one that involves a pause when there's a framework peace agreement on the table. So it'll be interesting to see if Witkoff comes back with different impressions from President Putin. But at the moment, the Russians are holding out for a truce at a time when there's a proper framework peace deal on the table, and we're not there yet.
Yeah. Tony, thank you so much for the reporting. Tony Halpin leads Bloomberg's Russia economy and government coverage. Thank you. Well, coming up, Israeli leaders expressed displeasure at Washington holding direct talks with Hamas. We'll have the details and the prospects for a new ceasefire agreement in Gaza. That's next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Tensions are surfacing between Israel and President Trump's administration after the U.S. engaged in direct negotiations with Hamas regarding hostages in Gaza. This as Israel halted its already limited supply of electricity to the Gaza Strip in response to the hostage crisis. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. So, Dan, our understanding is that Israeli envoys are back in Qatar, potentially will be joined by Steve Witkoff, the U.S. Special Envoy. But there seems to be a bit of infighting that's happening, at least with the U.S. administration, as far as these talks go. Can we expect a breakthrough?
Well, the two issues are connected. However, I think the issue of the tensions between the administrations, the American administration appears now to have drawn a line under that, with Marco Rubio, the Secretary of State, saying yesterday that those talks, the direct talks, very rare direct talks between the United States, specifically a U.S. envoy by the name of Adam Baylor, and Hamas were, in Rubio's words, a one-off exploratory situation, but it appears now the administration is happy to be putting into its rearview mirror. That is something the Israelis will greet with some relief, because as we've heard and as we've reported, the Israelis were not happy with this, neither the fact that direct talks were being held, apparently without Israel being consulted, nor by the tenor that envoy struck in several interviews he gave just a few days ago about what he was hoping to achieve. Israel and the United States for 3 decades now, and a number of other Western powers, have been in agreement about the need to isolate Hamas, listing it as a terrorist organization. So direct talks could potentially have eroded that standing of Hamas. So for now, everyone is looking at Qatar. Witkoff is the lead man, according to Rubio. And the big question is whether the negotiators can bring something to that table in Qatar, being one of the mediator countries, that will dislodge this now 9-day limbo in the diplomacy around Gaza. 9 days ago, the last truce expired as scheduled, and there does not appear to be a new truce in the works. Neither has there been a resumption of warfare. So everyone's wondering what will unfold in the Qatari capital in the coming days.
Are we likely, Dan, to see another proposal put forward? There's been a number of them that have at least been proposed. What's the likelihood there will be an alternative for the Gaza crisis?
I think there's no end of proposals. I do think that getting stuck in the idea of proposals does tend to miss the crux of the issue. The crux of the issue is whether the sides will engage in another truce. The last truce was 6 weeks long. The next one could be 6 months long. A truce is essentially self-interested, and it is temporary. Or whether they will move to a more ideal plane, something approximating a peace deal. For that to happen, Israel insists Hamas has to go, and Israel has the backing of the United States in this. Hamas has only signaled that it might cede some power. It's refused to give up its weaponry. As long as that impasse persists, the sides can propose as much as they want, but there won't be any progress.
A lot to look forward to there and pay attention to. Bloomberg's Dan Williams in Jerusalem. Dan, always great to have you reporting on. Thanks so much.
And shares in shippers Moller Maersk and Hapag-Lloyd have both advanced on reports that Houthi rebels issued a 4-day ultimatum. According to Lloyd's List and Tradewinds, the Yemeni group said they would resume attacks on ships in the Red Sea if Israel continues to prevent aid from entering Gaza. So that is the latest from some of those key shipping companies. Let's take a look at how equity futures are trading, all of them leaning towards the green. The theme is green today, despite the massive sell-off that we had. Broad-based risk-off sentiment taking hold of markets in yesterday's session, with the S&P ending the day more than 2% lower, 2.7% by the close, 4% lower for the Nasdaq. Today, things are looking up, even with the European index looking up 0.4% in futures. Now, coming up, Syria's government signs a breakthrough deal with Kurdish-led authorities in the northeast. We'll bring you all the details next. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. The magnificent meltdown. Asian markets follow Wall Street lower after a tech-led sell-off sees the Nasdaq crash to its worst day since 2022. Citi joins HSBC in downgrading U.S. equities to neutral, saying American exceptionalism is on pause as worries about the economy add to the threat from tariffs. Plus, will there be a deal in the desert? We'll bring you the latest from Saudi Arabia as the U.S. and Ukraine meet to discuss the push for a ceasefire in Russia's 3-year-old war. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg.
And Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. Jen, picking up on what was a bit of a bloodbath for global markets yesterday. Nasdaq ending the session more than 4% lower. Tesla down 15% yesterday in trading.
Yeah, bruising day in all parts of the global market, if you take a look at it, Jumana. But if we take a look at where markets are positioned ahead of the trading day right now, potentially we're seeing some reversals or a little bit of green, at least if we take a look at NASDAQ futures right now. As you can see there, green on the screen for NASDAQ futures. But as Jumana was just mentioning, Monday was quite a bruising day for markets. We did see the NASDAQ having its worst day since September of 2022. The S&P and Dow, their worst day since December of 2024. And the Nasdaq, as you were mentioning there, Jumana, closing or losing just about 4% on the day, with big tech being the biggest of laggards. Potentially we see some turnarounds. Yeah, Treasury yields, though, moving lower right now amid recession fears, down about 3 basis points right now, with the 10-year yield at about 4.18% there. If we take a look at emerging market currencies, right now, largely unchanged if you take a look right now, but still the sell-off on Monday did extend to the EM currencies globally, and we actually saw this EM currency index halting their 4-day rally. Potentially we see that changing today as well, even though despite we're seeing the dollar now tracking marginally higher. And then finally, the energy space steadying a bit after a decline right now. Brent crude below that $70 a barrel at $69.25. Oil now has fallen almost a fifth from a high in mid-January, amid a lot of the concerns as we talk about around tariffs. There's, of course, OPEC Plus and their supply plans and weakening demand more broadly. And finally, let's just bring you our terminal chart. Despite from what we've heard from President Trump saying he's not necessarily concerned about the stock market, potentially he will be after he sees some of the declines that we're seeing now. The Mag 7, as this chart is showing, has now given up all its gains since the U.S. election, with only Apple and Meta still in the green. And so it begs the question from our MLive team that they suggest, is the era of U.S. stock market exceptionalism over? We've been talking about that with a number of our guests this morning, so something we'll pay very close attention to. Let's, though, check in on how markets in Asia are faring. It's been a few hours since they've been open over there. Avril Hong is standing by in our Singapore studio. Avril, quite a bit of red on the board.
Yeah, but I think there's a sense of stabilization that's returned to Asia's stocks, the region's benchmark, pairing losses from earlier along with what we're seeing in U.S. futures. And amid all this, of course, some of our colleagues have highlighted that despite this calm that seems to be returning today at least, it's hard to see that the selling is all over between the tariff back and forth as well as the geopolitical shakeup. Of course, what's going to be key to watch is the US data later today and later in the week as well. Then the question becomes, is this a buy opportunity for China, Hong Kong stocks? Possibly. I mean, you look at the AI optimism, the stimulus optimism potentially also from the NPC, and then you had the likes of Citi upgrading Chinese stocks from neutral to overweight. As they say, US exceptionalism, not over yet, on pause. Those were their words. So interesting setup when it comes to Chinese equities for the board. Just wanted to put things into further context for you as well. If you take a look at this chart, which shows you a gauge of Chinese shares in Hong Kong, it's actually outperforming the Hang Seng China Enterprises Index versus the S&P 500 since about a month ago. So keep that in mind as we see even the pressure that's coming for Chinese stocks today.
Thanks so much, April Hong in Singapore for us. Appreciate it. Let's stick in Asia. China's NPC gathering showed a renewed focus on artificial intelligence, with lawmakers proposing to promote AI-related education and scale-up applications. Our chief North Asia correspondent, Stephen Engel, is joining us now from outside the Forbidden City in Beijing. So, Steve, thanks so much for joining us. Talk to us about some of the tangible takeaways that we got from this week-long meeting.
Well, clearly, boosting domestic consumption is the top priority. That shouldn't be a surprise given the situation in the Chinese economy against the backdrop of increased trade protectionism and friction with the United States and other trading partners. So that is the main thrust. But clearly, as you just mentioned, Jennifer, that AI initiatives were all the rage. I mean, from the press conferences with the CSRC, the securities regulator, all the way up to what we heard in the beginning with the Premier Li Qiang talking about AI and innovation being part of that push for, the Chinese priorities. Clearly, last year, they doubled down on industrial policy with the new three, the EVs, the solar panels, and batteries. But that stoked more trade friction because it led as well, with that emphasis on those kinds of industries, to overcapacity. And perhaps even some claims of dumping in those products abroad. This time, the focus was much more on advanced computing and AI. Obviously, with DeepSeek and some of the other little AI dragons that have come to the fore, little and big, Alibaba, of course, coming out with their large language model and showcasing it, along with many others, is the focus. And that's why many different provincial leaders, as they gathered over the course of the week behind closed doors within the Great Hall of the People, all kind of jockeying for position to get support from the central government to be the next AI hub. They clearly see, with a bifurcated world right now between China and the United States and the trade friction, AI, with the success of DeepSeek and others, is going to be at the forefront. And it definitely was on the minds of many leaders who spoke openly about it.
Stephen, let's just stay on the relationship between China and the U.S. What insight did we have about what this looks like moving forward, and namely a potential quote-unquote birthday summit? Talk to us about that.
Well, clearly, there is some friction between China and the United States. There's now been a new 20% tariff put on to China because of the Trump administration's claim that China is not doing enough to curb the precursors of fentanyl into the United States. China has fought back through state media, as well as the foreign minister, Wang Yi, saying on this issue, the United States and the Trump administration in particular has been two-faced. So the wording from the NPC has not been kind to the United States, nor has it really given any indication that they're willing and ready to sit down and talk. They said they are willing to talk, but not, necessarily taking these accusations lightly. Now, could these two men you're seeing on the screen right now have a summit, as some are proposing, perhaps in June? These two gentlemen have birthdays that are just one day apart, June 15th and June 14th. They're born 7 years apart, with Trump being the senior. But I would say, right now, given the friction and the frostiness between the two nations, it would be very difficult to have a summit in June with these two gentlemen, in particular in Washington. no way would the Chinese authorities want Xi Jinping to go to Washington and get the so-called Zelensky treatment in the Oval Office. There would have to be some very well choreographed deliverables for the Chinese to make the Chinese side not sit there and take the blame for the fentanyl issue or the trade imbalance. There has to be something for China in it. That's why the suggestion perhaps in China in June could be a summit. But again, it would be a highly choreographed affair, and it would have to be on China's terms to make China look good as well.
Fascinating stuff. Bloomberg, Stephen Engel for us. Stephen, thanks so much.
Well, over in the Middle East region, and what is widely seen as a major breakthrough, Syria's interim government has now signed a deal with the Kurdish-led authority that controls the country's northeast. The deal will bring military and civilian institutions and facilities in North and East Syria under Syrian state control. And the U.S.-backed Syrian Democratic Forces will now support the government in battles against threats to national security. Dana Khresh, our UAE bureau chief, joins me now. Dana, this feels like a very significant moment, is it?
It is really very significant. I mean, this is part of what al-Sharia is trying to do, consolidate all of Syrian territory under one rule, under his government. And the deal actually stipulates integration of the Kurds into a single Syrian state. So that really means eliminating any prospect or actually taking away this dream, the Kurdish dream in Syria, of having an autonomous or even semi-autonomous authority like we have in Iraq. It also gives them and grants them Syrian nationalities for everyone, basic rights which weren't available for them or given to them by Syria's Bashar al-Assad, the former rule. And this is also very significant for Turkey as well. Yeah. Turkey sees the YPG, which is a major militia inside this Kurdish force, the Syrian Democratic Forces, who defeated ISIS during this war as terrorists. So how Turkey will see this agreement and how they will react to it is also very important.
So I was going to ask you about the Turkey angle. The last few weeks, we were speaking to our other colleague, Onur, about Öcalan, the jailed PKK leader, calling for laying down of arms within Turkey. And that was seen also as a significant moment in terms of just the government's relationship with these militia groups. How does that relate to the announcement that we've heard from Syria overnight in terms of the integration of some of those Kurdish groups now into the central government?
I think this is all like one big picture of how the Kurds are now dealing with the new reality on the ground in Syria and in Turkey as well, right? I think that it also maybe removes this idea from Turkey that we have written about so many times, that they want a buffer zone on that border, and what will happen to the Turkish-backed forces that have been battling these Kurdish forces inside Syria. Syria is very important, and now we're seeing that the Syrian state under Sharia will also take control of all of the ports, border points, energy fields that were once under the Kurdish rule.
Okay, so that's one minority group within Syria, but of course the whole world is reeling from the events over the weekend. Ahmed al-Sharaa, the interim president, now saying that he's launching an investigation to see exactly what happened on these coastal cities. But I think the whole world is a bit shaken up by what is perceived to be a targeted killing of some minority groups within Syria.
Exactly. So while this agreement with the Kurds is one of his biggest achievements, or the biggest achievement since he's taken over, I think this is the biggest challenge for his Sharia moving forward. He changed his image from an extremist under Tahrir al-Sham in military fatigue to someone who is now a politician, a president. But the group he was leading, and that group, Hayat Tahrir al-Sham, these are fighters. Most of them are groomed to be fighters, have extremist ideologies. So a trigger with the Alawite community led to a lot of claims and videos that we couldn't verify. But again, these are claims of people saying they were attacked. Civilians, Alawite civilians were attacked, some in their homes, some outside. And so this is his biggest challenge. You don't want a sectarian strife now, or any attacks on minorities while you're trying to lift sanctions, while you're trying to kickstart the economy. And we saw a lot of condemnations from the EU and the US as well. They are looking at Sharia to see how you're going to deal with this.
Yeah, and whether he can control his own people. Dana, thank you so much for the reporting. Dana Khresh, Bloomberg's UAE bureau chief. The Philippines says former President Rodrigo Duterte is in police custody after the International Criminal Court issued an arrest warrant following an investigation into his deadly drug war. Duterte was arrested by police at Manila Airport shortly after arriving from Hong Kong. Duterte is currently running in a mayoral race, seeking to reclaim a post that gave him national prominence for endorsing a shoot-to-kill style crackdown on crime. And coming up, a chocolate meltdown for Ghana's economy. All the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Ghana's economy grew at its slowest pace in more than a year in the fourth quarter. This as industrial activity almost stalled as the cocoa sector shrank again. Bloomberg's Ndiro Oganga joins us now from Kigali with more. So Ndiro, talk to us about the slowdown in growth and what more contributed to it.
Hi, Jen. So like you mentioned in the intro, industry was one of the sectors that really contracted 0.2% growth in comparison to the third quarter of 2024, where it grew by 10.7%. Then you have agriculture employs nearly 40% of the workforce in Ghana. It only grew by 2.9% from 2.5%. And if you look at agriculture, you see that cocoa shrank by 21.4%. And this is the sixth consecutive season where we are seeing cocoa growth and expansion shrinking. And it has been hit by a range of headwinds, including climate change, where we are seeing extreme weather conditions, absolute rainfall leading to flooding of cocoa fields. We're also seeing diseases like swollen shoots that has affected 17% of the total tree count in Ghana. You have edge trees, which according to Cocoa Board account for 20%, and also smuggling, where we are seeing cocoa beans leaving Ghana being smuggled into Ivory Coast and Togo with the hope of getting a little bit more money per ton that they get to sell. We also saw services expand by 6.3% from 6.5% in the third quarter of 2024. And all these factors compounded into dragging down growth in the fourth quarter to 3.6% from 7.2% in the third quarter of 2024.
And this isn't necessarily news that the new government wants to hear. We will get the budget, though, later today. What's the expectation from the Minister of Finance?
Jen, what we'll be looking out for is what he says in terms of debt repayment. He had earlier on mentioned in an Expresses that Ghana will begin paying back its debt and servicing some of that debt this year. And because of the financial strain that it's going to put, he said that a lot more revenue is going to be allocated to that. So it will be interesting to find out how much vis-a-vis the revenue collection that the country makes. The government has also made it very clear that they're keen on austerity measures. The minister said that they'll be going to cut down on wasteful expenditure. So we are looking out to also see where some of that money will be going. He mentioned of restructuring of the taxes, and it will also be interesting to hear how they're going to balance that with IMF targets.
Yeah, we'll wait for that to come later today. Bloomberg's Ndiro Oganga in Kigali, Rwanda for us. Ndiro, thanks so much. Thanks for joining. Now, coming up, why Alibaba.com still expects to see its U.S. business grow despite increased trade risks. Our exclusive interview with their president is up next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Alibaba.com says it still expects healthy growth in its U.S. business, despite the uncertainty caused by President Trump's trade policies. Its president, Kuo Zhang, tells Bloomberg exclusively that the firm's supply chains are resilient enough to withstand tariffs.
We see a lot of growth from U.S. since now we have global supplies in China, in Southeast Asia, in Europe as well. And we believe building a global supplies with more resilient supply chain to help SMBs in Europe is still our strategy. And in the early of this year, we see the U.S. orders, meaning the SMBs, buying from Alibaba.com is still kind of 30% of growth. So I think it's very strong, and we'll keep investing on that.
Do you see that still being able to be replicated even if you've got a lot of trade uncertainties and tariffs that are rising?
I think so. So the first one is that we are providing a supply base all over the world. So now we have more than 10,000 of suppliers in Europe and also in Southeast Asia, in India and Pakistan as well. So we're not supplying the kind of product only in one country. Actually, it's a global supply. And the second is still demand and supply is the fundamental rules. So all the other kind of turbulence may impact in short term, but according to the current data, there are still a lot of people who is not penetrated by internet or digital. We believe there are going to be more and more people is using the platform technology to do their business. So that is not my kind of concern now.
We had the inflation figures that came out and they showed that really there's a concern building still around deflation within China, both in CPI, PPI, but you're dealing with businesses that are export oriented. So how are those businesses looking right now?
I think two things that I can share with you. So since the beginning of this year, the search index, both in China kind of search engine, also the social platforms. So searching Alibaba.com and global trading actually increased by 3 digits. It's like 118% of growth, which indicate that more and more people is interested to go global. And also the new sellers onboarded on Alibaba.com actually is growing very fast since last year. So we believe there's still a trend. And also one thing more that we can add to it is AI technology. So previously, many of the Taobao or Tmall suppliers, if you ask them, do you want to go global? I think the answer are all yes. But when they learn that they need to overcome the language, the time difference, the foreign exchange, custom clearance, all this stuff, then it's a little bit hesitant. So now all these layers is kind of is built on top of the new technology. And now we are lower the barrier for everyone to do this business. I think this is another angle that we impact and improve the kind of confidence for the suppliers.
Alibaba's president speaking exclusively with Bloomberg's Annabelle Jewelers. Now, 5 of the billionaires at Donald Trump's inauguration have collectively lost $209 billion since January the 20th. According to the Bloomberg Billionaires Index, Elon Musk's wealth has declined by close to $150 billion as Tesla shares have tanked. Amazon founder Jeff Bezos is $29 billion poorer, with Google's Sergey Brin losing $22 billion. And you may recall over the weekend, President Trump was asked about whether the U.S. is entering into a recession. And he said it is a period of transition. And with that, the market has really started to reprice where exactly that Trump put is for stock markets. A really heavy end to trading yesterday for the S&P and Nasdaq. The S&P pulling back almost 3%, the Nasdaq down 4%. We spoke about Tesla alone dropping 15% yesterday after UBS put out a report suggesting that they're going to shortfall of their delivery targets in 2025. This morning, the mood is up. You can see S&P futures, Nasdaq futures leaning towards the green, although slightly less positive than we were about half an hour ago. So some of the steam is coming out of these markets. Eurostoxx futures also in focus as well, up 0.5%. This after a pullback of almost, just above 1.5% yesterday. For the year, though, European indices continue to outperform, up 10%. But that is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.